Hey warriors, I hope you're all doing good. Today we start the CA Inter May 2024 amendment lectures. Rahul, what do you mean by an amendment lecture? Why is this important? For all of my friends who wrote the November 2023 exams, you may have written your exams under a finance budget called as Finance Act 2022. What? Finance Act 2022. Yes, if you have learned with me, you know the background of why we do this. Yes. Now, if you unfortunately could not clear the November 2023 exams, you are now moving to May 2024. Now, is new syllabus the only thing which has changed for you? Unfortunately, no. Like I told you in the previous videos, from direct tax perspective, there is no change in the syllabus as such. But the one thing which has significantly changed for you is the budget itself. Meaning, every year, income tax has a mandate that they will launch a new budget, and basis the new budget will come a new finance act. Basis the new budget will come a new finance act. For your exams who are going to attempt for May 2024, you now have to read Finance Act 2023 as well. Yes, and therefore this amendment lectures have become extremely critical for you to understand as to what are the changes which has happened from the previous time you wrote your exams in November 2023 to the next May 2024. This lectures is only for those students who have written the exam for November 2023 and earlier, and not for students who have already been enrolled for the May 2024 lectures, because you are already up to date with the lectures when you did the lectures itself. The amendments are already taken care in the lectures itself, so you are completely aware about the amendments. Do not come and waste time here. This is solely for those students who have written the earlier attempts and want to understand what are the changes which they have to focus upon in the new attempt. Now, there are two ways to do this lectures. One way is that you continue using your own material and then you make these amendments which I am going to discuss with you right now in a separate material, or you incorporate in the same material itself so that you can easily understand it. Option number two, you end up buying a fresh material. The fully updated concept guide for the May 2024 attempt, which has all the amendments already mentioned inside. Yes, it's your choice as to which one you want to do. My preference is always to the second thing, not because of any other reasons, but for the fact that if you have already had the previous material itself will have amendments of that year. Yes, apart from that, if you also incorporate amendments of this year, you may get confused. Plus, you may already have scribbled enough in that material. To have some more scribbling happening in that material will only confuse you during your exams. Preference is to have a fresh material taken for you so that you can start afresh. But yes, the recommendation is to never change the faculty's material or never change your background material, because then you will have to read the whole thing once again and understand their formats. If you already have a set of material, you can use that same faculty's material or the same background material which you have for preparing for your May 2024. That is what the idea is. Now, Rahul, is this lectures for only those students who have learned from me in the past and not for students who have otherwise learned from other faculties? Answer is no. We will try to make these lectures as detailed as possible so that even if you have not learned from me or you have not taken my material, you still are able to understand what the changes are and you can incorporate those in your respective materials also. Yes, great. On this note, let's start the lectures. Before I start, let me also clarify this to you that this amendment lectures are going to be a little heavy for everyone because there's a lot of changes to discuss and we need to do things on the ground level. So we will not be doing a bulk lecture where 6-7 hours I'm going to upload in a single shot. This will be done in sequences. We will shoot a video for maybe one chapter or 1 hour, whichever is later, and then I'll start posting it. You can slowly start watching it and updating yourself. As we keep progressing, the lectures will get closed. Let's not have a bulk lecture with just the amendments. It will be too much for you to undertake in a single go. Yes, so we'll keep it in that sequence. Don't worry about the lectures. As we do the amendments which we are there, we will also discuss question and answers. If they are found to be relevant and important for you. So if at all you have to do some practice questions, that also will be discussed in this lectures itself. So feel free to have these lectures on your back of your head because this will help you in all parameters. So don't worry about it. Keeping that in mind, let's start the lectures in a full force. Yes. How we are going to look at the lectures is very simple. I'm going to use my own material. Now, for those who know about my material, every time there is an amendment which comes in, I will ensure that those amendments are shown in green color, right? So even if you don't have the material, don't worry about it. I will take you through all the green colors which are shown in my material, and then we will keep discussing them as we progress. If you have the fresh material, you can use the same material. You will find the same greens there. If you don't have the fresh material, don't worry. Make your own notes and you can proceed accordingly. Sounds good? Great. In my material, what we are going to do is we are going to look at the amendments chapter wise. Now, just to clarify to you, there are no much significant amendments when it comes to CA Inter. Yes, the one biggest amendment which you're going to look is the section 115 BAC, which is going to be the last topic which we're going to discuss. Before that, we'll cover the smaller amendments so that you are very well aware about what is going to happen. Sounds good? Sounds good? Perfect. Let's start on that note. You have the chapter number 1 called as Basics of Income Tax. Now, there is no changes in Basic of Income Tax. Everything is the same. Nothing has changed except for one thing which I told you right now. Till November attempt, you would have learned something called as Finance Act 22. For the May 24 attempt, you are now going to learn a fresh act called as Finance Act 23. So, for your attempt, everything is going to be Finance Act 23, which means for your exams, the assessment year which is applicable is assessment year 2024-25 and previous year 23-24. This is what will be applicable for your exams. Please keep this in mind. You may have learned some earlier assessment years. It doesn't matter. For your exam, this is assessment year 24-25 with previous year 23-24. All your exam questions are now going to be with this assessment years. This is the only amendment which I would like you to know from Basics of Income Tax. Nothing more than this. Can we proceed? Great. Let's proceed to the second chapter, which is called as Rates of Taxes. Now, Rahul, when it comes to rates of taxes, meaning the tax rates, there is absolutely no amendments when it comes to normal rates of taxes. Everything which you see is going to remain the same. No change at all. So, we are not going to discuss things in detail. The one thing which you need to know is from a company angle. Now, I would not call this as an amendment per se. This is a change which happens every year. So, you need to know. To give you a background, every year income tax comes and says that when you are a domestic company, your tax rate will be about 25% or 30%. 25% happens when the previous year turnover is more than 400 crores. When the previous year turnover is more than 400 crores. So, when you were in November 23 doing exams for previous year 22-23, you would have taken previous year 2021. Since the year has now changed, for previous year 23-24, in case of a domestic company, you need to check for the turnover of previous year 21-22. This is the only change which you need to keep in mind from a company angle. If your previous year 21-22 turnover is now more than 400 crores, you will have a tax rate of 30%. But if it is less than 400 crores, you will have a tax rate of 25%. Yes, one amendment from a company perspective. Please keep this in mind. Can we proceed? Great. Let's proceed. No amendments in your marginal relief and all those things. You are finally going to the last amendment for the chapter, which is the Rates of Taxes chapter. Your new amendment called as online winnings. Now, let me give you a background on this. Until last year, what happened is generally when you used to have winnings, winnings were taxable at the rate of 30%. But the problem what happened is when it came to the online market, things became very famous recently. You might have seen, people have now become very fond of playing this Dream 11, Rummy Circle, Teen Patti, poker and all those things. Those platforms became extremely famous and people started earning crores of money in that. And I'm literally saying crores of money. Yes. Now, the problem what happened is for all those players, it was very difficult for us to deduct taxes and pay taxes because it was not being disclosed anywhere. In all likelihood, what would a person do? A person would invest money into this Rummy Circle and all those things, earn income and keep it in the same account. Because he's going to use the same money for his next gamble. Yes or no? Yes. So, never it happens that this money comes into the eyes of the law. Never had it happened that this money came to the eyes of the law. To avoid all those, in the current year, income tax came and notified online winnings as a fresh set of taxation. Income tax came and said from current year, which is current year 23-24, any online winnings will now be taxable for a tax of 30%. Any online winnings will now be taxable at a rate of 30%. Same as the normal winnings, with an extra point that when it comes to normal winnings and all, you come and say generally you cannot claim any expenses and all. Yes, now here also you cannot claim expenses, but things become a little tricky when it comes to winnings, and therefore they have given a special set of formula. They have given a special set of formula. Rather than mugging up the formula, let me give you logics. Imagine a scenario. Imagine a scenario where there is a person called Bola. Who is the person? Person is called Bola. Now this person called Bola has decided that he wants to play in Dream 11. So what has happened is he's decided that he wants to play in Dream 11, and therefore he started playing. Now he has been playing for the last 5-6 years, and for all those years never has been tax collected because he's never taken out the money from his Dream 11 account. Yes. So what happened is when he opened his account in the current year on 1st April 2023, the balance in his account was 50 lakh rupees. How much was the balance in his account? 50 lakh rupees. Now question to you, on this 50 lakh rupees which was earned in the previous years, will he pay taxes? Answer is no. He will not pay taxes. Agreed? Hello? Agreed? Yes. Now what happened is in the current year, 50 lakh rupees he started with. And in the current year he started playing games. In the middle he had a big gamble because IPL was starting, and therefore he decided that he wanted to put more money so that he can play more. So what happened is somewhere in the middle of the year he made a deposit, extra money account deposit. Let's say another 5 lakh rupees. Question to you, this 5 lakh rupees which he put in the account, will it be taxable as winnings? No, because he put the money. Yes or no? So what he did is he put the money, and this is also not going to become taxable because this is his personal deposit. Yes or no? Which means right now if you see the account will have 55 lakh rupees. Account will have 55 lakh rupees. But obviously this person is going to play. Imagine in the middle of the year. He found that he has got enough money for him to withdraw and buy something. So he decided that he wanted to withdraw some money. Let's say for example he withdrew 4 lakh rupees. Yes. Now understand, when he withdrew 4 lakh rupees, the 4 lakh rupees can be from the opening balance, can be from the deposits, can also be from the earnings of the current year. So you don't know what it is. Let's ignore it for now. But this is what the background is. Now at this point of time you will come and say, Rahul, 50 lakhs is my opening balance, 5 lakhs is what I deposited, 4 lakhs is what I withdrew. Technically my account should have a balance of now 51 lakhs. Yes, but what happened is on 31st March 2024, when he checked his account, the balance was showing as 60 lakhs. Rahul, how did it become 60 lakhs? Obviously, no, if he's going to play in the rummy circle, he's also going to earn money. So what we have put the deposit, we have withdrew the withdrawals, but we have not discussed about what winnings he earned. Now, do the back work and tell me what is the winnings. Hey, help me quickly. Yes, what is the winnings? You're telling 50 lakhs is my initial deposit, 5 lakhs I deposited, 4 lakhs I have withdrawn, which means number should have been 51 lakhs, but closing balance is showing 60 lakhs, which means your winnings would have been 9 lakhs. Yes or no? Now today if I have to tax this for you, I will tax what? I will tax 9 lakhs at the rate of 30%. Hello? Yes or no? Yes. This is the simplest way for you to do it. But if I have to clarify this in exam terms, in the formula manner, how will we get the winnings? Winnings is equal to closing balance minus opening balance. Yes, 60 minus 50 minus non-taxable deposit. You have made 5 lakhs deposit, that will also not be taxable, plus withdrawals. Hey, that is how the number came, no? Plus the withdrawals. Yes or no? Yes, that is what income tax is coming and telling. If you want to find out the winnings of the person, it is a closing balance minus opening balance minus non-taxable deposit plus plus the withdrawals. This is the best formula which income tax is notified, but it looks complicated. Therefore, to avoid all those, you can use your logics. At the end of the day, what you are going to tax is the winnings of 9 lakh rupees. Yes, you're going to tax the winnings of 9 lakh rupees. If you can follow the sequence of events, you will get the same number. Now, what is the provision, Rahul? The provision is the same as normal winnings. Income tax comes and says, take this winnings of 9 lakh rupees, tax it at the rate of 30%. No basic exemption limit to you. No set off of losses to you. No other expenses will be allowed as a deduction. Take the number, flat 30% tax is what you're going to pay. This is what the formula is. Yes, so it is closing balance plus amount withdrawn minus non-taxable deposit minus opening balance being taxed at the rate of 30%. Yes, a fairly straightforward thing, nothing complicated about it. Very easy provisions. Can we proceed? Yes. So amendment number 1, the most important amendment for the current year is your online winnings. Please mark this as important because the expectation of this coming in exam is very high. More so for the fact that you will see it in a normal total income question. So please keep this in mind. Formula is very straightforward if you understand it properly. Can we proceed? Yes, great. This marks the end of your chapter number 2, and we're moving to chapter number 3. Which is your residential status and scope of total income. Now, Rahul, is there any amendments in this chapter? Per se, no. If you're seeing my book, you will see no greens. So I'm going to quickly move forward. Until I find some greens. You have a green in the gift part. To give you a background, section 9 comes and states that whenever an income is deemed to accrue or arise in India, this is taxable for all people, whether they are a resident or a non-resident. Until last year, income tax used to come and say that any kind of gift which is given to a non-resident non-corporate, or a foreign company will be treated as deemed to accrue or arise in India. Now, for those who understand the scope of total income, you know that when it comes to non-resident, 4 incomes are taxable. Income received in India, income deemed to receive in India, income accruing or arising in India, income deemed to accrue or arise in India. For a R and OR also, same 4 income plus an extra income is income deemed to accrue or arise outside India, but received from a business which is controlled from India. Yes. Point is, when it comes to NR and RNOR, the scope of total income is fairly the same. Now, if you read the wordings, it comes and says, any money which is gifted to a non-resident non-corporate or a foreign company shall be taxable as section 9. Problem what happened is, because they mentioned the word only non-resident non-corporates and foreign companies, they did not mention the word RNOR. And therefore, the assumption which people start making in the market is, if a gift is given to an RNOR, it will not fall into the scope of total income and therefore not be taxable. Now, this anomaly caused a problem because non-residents were paying tax on the gift, but RNOR were not paying tax on the gift. To avoid that confusion, current year amendment, they came and clarified that, Rahul, if at all any gift is given, the gift given even by to an RNOR will become deemed to accrue or arise in India as long as it satisfies section 56(2)(10) provisions, which is the gift provisions of 50,000 and above. It's just an anomaly, a clarification given to the section. Not so important from exam perspective, but it's an amendment, so good to know. Amendment clear? Yes. Apart from this, Rahul, is there any amendment in this chapter? Absolutely no amendments in the chapter. Chapter number 2 is clean. Can we proceed? Yes. Great. Moving on to chapter number 3. We are in income from salaries. Chapter number 3. Now, Rahul, is there any amendments significant enough in this? There are 2 amendments which you need to know. First and the most important amendment is in a section called as leave salary or leave encashment. First and the most important amendment which you have to know is from leave salary and leave encashment. Until last year, if you notice, when it comes to leave salary, the provisions were as follows. If you have any leave salary or leave encashment, if the leave encashment or leave salary is received during employment, it was taxable. If it was received during retirement, then in that case, they will come and ask you, tell me whether the money is received by a government or non-government. If it was received by government, then the income was fully exempt. But if it was received from a private employee or a non-government employee, then in that case, least of the following 4 were exempt. It was actual, the average salary for the last 10 months or salary for the last 10 months, then average salary per month into leave balance available. And 4th item till last year was 3 lakh rupees. 3 lakh rupees. Current year income tax came and said 3 lakh rupees is a very small number and was introduced very long back. In order to ensure that people get their right leave encashment and are able to enjoy the benefits which they are getting out of working hard in this market, the number was proposed to be increased to a number of 25 lakhs. The number was proposed to be increased to a number of 25 lakhs, which means starting current year, if at all there is any person who avails leave encashment, the least of the following four notified limit will not be 3 lakh rupees but will be 25 lakh rupees. This is an amendment in one of the important adjustments of salaries. So therefore, please keep this in mind. Expectation of this coming in exam is very high. So please keep this in mind. 25 lakh rupees is the fresh limit for leave encashment. Clear? Yes. A fairly straightforward thing. I don't want to solve questions around it because the limit alone has changed. There is nothing great about to worry. But please keep this in mind. This is an amendment in leave encashment, section 10, clause 10, AA. Can we proceed? Yes. Rahul, what is the next amendment? The next amendment, significant amendment, is later on notified. Now this amendment was not a part of your ICI study material also. So if you search this in your ICI study material, you will not find it. This was notified after the study material was launched by ICI, and therefore this was updated by way of a statutory update. What is the amendment? The amendment is in a section called as RFA. In the current year, income tax notified that Rahul, the provisions of RFA earlier were as follows. If you are availing an RFA as a government employee, then the license fees was taxable. If you are availing an RFA as a normal private employee, or a public employee, in that case, income tax said, I will come and ask whether the employer is owning the house or the employer is renting the house. If the employer is owning the house, then there was a city population criteria, meaning for the first 10 lakh population, it was 7.5%. If the population of the state was less than 10 lakhs, then the percentage of salary which was taxable as RFA perquisite was 7.5%. If the population was above 10 lakhs and up to 25 lakhs, it was 10%. And if it was above 25 lakhs, the percentage was 15%. On the right side, they came and said that if the house is not owned by the employer but is rented by the employer, then the RFA perquisite would be the actual higher charges or 15% of the salary, whichever is lower. Somewhere in the on 1st September, income tax notified that this RFA guidelines are very costly. The percentages given are very high. And therefore we would like the percentages to come down a little bit for all employees. And therefore starting 1st September, these are your revised limits. Income tax came and said, starting 1st September, if you are not a government employee, I'll again ask you the same question. Tell me, are you a person who has owned the house or has hired the house? If you are the employer who has owned the house, the populations are now as follows. If the population is up to 15 lakhs, the number will become 5%. Earlier it was up to 10 lakhs, 7.5. Now it is up to 15 lakhs, it is 5%. Then after 15 lakhs, up to 40 lakhs, it is 7.5%, and after 40 lakhs, it is only 10%. Which means the maximum percentage of RFA which they'll collect from you right now is only 10%. On the right side, they came and clarified that if you are not an employee who has if you're not an employer who has owned the premises but is rather hiring the premises, earlier it was actual higher charges of 15% of salary, whichever is lower. Now it is actual higher charges or 10% of salary, whichever is lower. Which means income tax now comes and says that when it comes to RFA, the maximum charge which I will levy on you is only 10%. This is the amendment of current year. Now, the one thing which I want to clarify to you is this amendment came into effect from 1st September. Which means the provisions up to 1st September will be the old provisions. The provisions up to 1st September will be old provisions, meaning in the current year alone, when you're computing RFA for April, May, June, July and August, 5 months you will do old provisions. from September, October, November, December, January, February, March, which means 7 months you will do new provisions. You'll do new provisions. For this May 24 and November 24 alone, you will be obligated to do income tax RFA perquisite computation for 2 scenarios, for first 5 months and then for 7 months. Now this is what actually you should do. However, unfortunately, when the statutory updates were released by ICA, ICA forgot to mention the date in it. And so ICA has not come and clarified that in the current attempt they expect you to remember the old provisions or not. Yes, with the statutory update not having a date, the clarity is not there whether ICA wants you to remember the old provisions or not, or they only expect you to know the new provisions. That is something which is not clarified right now. Until the RTPs and MTPs come, you will have to wait and watch. Until those comes, please keep in mind that for the first 5 months you will have to do old provisions, and for the balance 7 months you will have to do new provisions. For this year alone. Anyway, next year everything will become the same, but for this year alone you'll have to do 5 and 7. If in RTPs and MTPs it is so found out that ICA expects you to not remember the first 5 months sort of provisions, I will inform it to you on a later stage, and you can choose to ignore the first 5 months. But until that happens, please do keep both in mind. Is that clear? Yes. Now, how to remember this for exam? Very simple. For the first 5 months, the percentage is 15%. For the balance 7 months, it is 10%. That is what the provisions are. Now, fairly straightforward thing. I don't want to do some questions, but still, for the sake of convenience, one question alone will do. Let's look at your study material question. Let's do question number C. Question number 14. Let's do question number 14. We'll do only one question so that you understand what we're talking about. Yes. Question number 14 comes and says, Mr. C is a finance manager in ABC Limited. The company has provided him with rent-free unfurnished accommodation in Mumbai. So a person has got RFA. The following particulars are given to you. Basic salary is 6,000 per month. DNS allowance is 2,000 per month, out of which 30% is forming part of retirement benefits. Bonuses as a fixed number is given as 1,500 per month. Even though the company allotted the house to him on 1st April 2023, he accommodated the house only from 1st November 2023. Now notice the question very carefully. They have given you the salary data, but they are coming and clarifying that the company gave him the house on 1st April. He only started using the house from 1st November. Now, in this question, Rahul, will you calculate RFA from April? Answer is no. Please understand, perquisites means a benefit given to someone. Yes, when I say benefit given to someone, it also means that the person should avail the benefit. In this example, if you notice, the person has not even availed the benefit for the period of April, May, June, July, August, September, October, and October. Yes, he has only started availing the benefit from November. When he has only availed the benefit from November, I cannot expect him to pay tax for the month of April to October also. Therefore, perquisite valuation here will start only for the month of November. Keeping that in mind, let's now check whether the person is having the property rented or the person is having the property owned. It says the company has provided him with a rent-free accommodation in Mumbai. Nothing is given. The assumption is company is owning the property. Now, because the RFA starts only from November, the new provisions will start applying. Rahul, what is the new provisions? We discussed we have to look for city population, and we discussed that the city population, if it goes more than 40 lakhs, if the city population goes more than 40 lakhs, in that case, the RFA taxable will be 10% of salary. Because the accommodation is in Mumbai, the assumption is that the population is more than 40 lakhs. There is no doubt about it. So it is 10% of salary. Now the question is, Rahul, has the definition of salary changed? Answer is no. The definition of salary remains the same, which means salary is equal to basic pay. Help me out. Basic pay plus DA forming part plus all bonus plus all commission plus all taxable allowance. Yes, this amendment remains the same. this salary definition remains the same. There is no change in the salary definition. Reading the question, it comes and says the basic salary is 6,000 per month, which means that will form part of the salary definition. Then they are coming and saying 6,000 DNS allowance is 2,000 per month. DNS allowance is 2,000 per month, but out of the 2,000 only 30% is forming part of retirement benefits. So you will only take 30% number, which is 600 per month, and finally the bonus is 1,500 per month. You will take all bonuses, so therefore that is also included. Now what is going to happen? You are going to add the number for the purpose of finding out a salary. Salary here is 7,500 and 8,100. So the meaning of salary will become 8,100 per month. Since the company is owning the accommodation, the RFA taxable will become 10% of this. 10% of this, which means 10% of 8,100 will be 810 per month. 810 per month. Now, because this property is only taken from November, you will multiply it by November, December, January, February, March. 5 months. You will multiply it by 5 months. Therefore, it will become 4050. So the RFA taxable for the person will be 4050. Now the same thing if you would have done in old syllabus, in the old provisions, it would have been 15% number, and therefore the number would be 5% extra. The number will be 5% extra. With the new amendment coming in, the percentage is only 10%, and therefore you are only going to tax 10%. You're only going to tax 10%. A very critical amendment for your exam. Expect this to 100% come in exam. Expect this to 100% come in exam. The only wait and watch is to understand whether you also need to remember the old provisions or you just have to read the new provisions. But a very, very important amendment for the current year. Please keep it in mind. Rahul, what is the amendment when it comes to RFA? Old provisions it was 15%. New provisions it is 10% of salary. Which means if it is hired case, it is actual charges or 10% of salary, whichever is lower. People, are you clear? Yes. Fairly an easy thing, nothing complicated about it, but a very good provision for you to keep in mind. Please ensure that you notice this provision. Take a minute and note it down if you have not noted it down. Feel free to pause the video and do it. In the interest of time, I am moving forward. Rahul, what other amendments do you have in salaries? You have one very small amendment in salaries, which is the contributions to funds. You have a very small amendment in salary, which is the contribution to funds. Starting current year, income tax had notified a very government had notified a very fancy fund called as Agniveer Corpus Fund. Agniveer Corpus Fund is nothing but a fund created by army officers. Where government of India came and said, if young people of India are excited to put their life in line for the country, we will call them as Agniveer. And we'll create a special fund for them. Which is called as Agniveer Corpus Fund. Now, because they are going to work in the defense, obviously their employer is going to be central government. So income tax came and clarified that if the central government makes any contributions for the employee under Agniveer Corpus Fund, this contribution will become taxable under the head salaries. Now you may come and tell me, Rahul, the person is going for a good thing. Country is contributing for his welfare only. Why is that we are taxing it? The reason is very simple. The provisions are same as ATCCD or NPS scheme. Income tax is coming and saying that, Rahul, when you do a contribution to NPS from an employer side, the income becomes taxable in salaries but gets fully deducted under Chapter 6A. Same provisions. When we do Chapter 6A, you will understand this a little better, but the provisions are as follows. They are coming and saying, if a central government contributes any money to the Agniveer Corpus Fund, tax it under the head salaries. Go to the Chapter 6A and claim it as a deduction under a newly introduced section called as ATCCH. What you will do is you will add the 1,000 rupees here and then claim it as a reduction of 1,000 rupees in Chapter 6A or whatever number government contributes. It's just an plus and minus. But an amendment of current year, so please pay focus. As such, central government level questions do not are not tested so much in exams, so may not come so much, but a provision for you to keep in mind. If you see a weird name like this, you will add it in salaries and then you will claim it as a deduction under chapter 6A. You will claim it as a deduction under chapter 6A. Clear? Clear? Yes, yes. So 3 amendments for you to discuss under salaries. One is leave encashment, one is RFA, and one is central government Agniveer Corpus Fund contributions. Rahul, apart from this, do you have any amendments in salaries? I don't think so. No amendments in salaries apart from this. No amendments in salaries apart from this. But the one very, very, very important thing which you need to know from salaries chapter, the one very, very important thing which you need to know from salaries chapter is that till November 23, if at all you were opting for section 115 BAC, if you were opting for section 115 BAC under salaries, your standard deduction, entertainment allowance, professional tax, nothing was allowed. Nothing was allowed starting current year. Any person who opts for default tax regime or 115 BAC, any person who opts for section 115 BAC will be permitted for standard deduction. Will be permitted for standard deduction, which means the standard deduction which you see is now eligible under both regimes. Is now eligible under both regimes. We will discuss this once again when we do the 115 BAC chapter, but for you to know, starting this year, if you have any standard deduction, then the standard deduction will be granted under both the regimes. Because this is an amendment, it will 100% come. It will 100% come in the current year. Do not make the mistake to not allow standard deduction for the 115 BAC regime starting current year. That is also eligible for a standard deduction. Please keep this in mind. We will anyway discuss this when we do section 115 BAC, but a very, very, very important amendment in the current year. Please pay special focus. Yes, people. Yes. Rahul, what happened to the balance 2 items? The balance 2 items remain as it is, meaning if you are opting for 115 BAC, entertainment allowance and professional tax are still not permitted. Under the whole section 16, standard deduction has been allowed now in both the regimes, but the other two remain to not be allowed. A very important amendment for your current year. Please be very careful. Yes or no? Yes. Great. This marks the end of your chapter of salaries. Coming to HP, you have 0 amendments when it comes to HP. You have no amendments in HP. So you can read what you read in the previous attempt. Same as it is. No change. Moving on to the next chapter of PGBP. We will do PGBP and end today's recording. Next recording will be followed up by balance topics. We are looking at the chapter called as PGBP. Only 2 amendments for you to know. One amendment which you will see in the charging section itself. Read it along with me, then I'll explain it to you. Section 28, point number 7. Comes and says, any benefit or perquisite arising from a business or profession, whether convertible into money or not, or paid in cash, or in kind, or partly in cash, or partly in kind. Now, until last year, the provision was already there. Which came and said that whenever a benefit or perquisite is extended to any person under the course of a business or a profession, it is taxable under the act. Provided it is there, whether convertible in money or not. A lot of cases came up before the courts. Saying, what do you mean by whether it is convertible in money or not? Second, there were a lot of benefits which I could extend to you. For example, I give you a loan. After I give you a loan, tomorrow I decide that I don't want the loan back. This is called as waiver of loan. A lot of courts came and clarified that waiver of loan is not an income taxable under PGBP because it is not a benefit which can be converted in money. It is a waiver given to you today for the money given in the past. And therefore, a lot of people were avoiding taxes in India, where what they were doing is they were extending loans to their group companies and then waiving off the loans. They were claiming it as an expense in their books, but they were never offering it as tax in the other books because they called it as a capital receipt. Noticing all those mistakes, income tax made an amendment in the current year where they came and clarified that whenever a benefit or perquisite is extended to any person, this will now become taxable even if it is not convertible in money, or even if it is in cash or in kind, or partly in cash or partly in kind. It doesn't matter. Any modes of payment is okay. With this amendment in the current year, going forward, if anyone extends a waiver of loan, the waiver of loan now becomes taxable in the hands of the recipient. Because it will get covered in the benefits or perquisites clause. Just a clarification section, nothing more than that. Proceed panlama. Let's proceed. No amendments in your normal. Section 32 and all remains the same. No changes in all those things. You are moving on forward. You will find a section called as section 43B. For those who know what is section 43B, section 43B comes and says that there are certain payments which I will allow to you only on payment basis. Rahul, what are those items? If you remember, any kind of bonus or commission given to employees, any kind of employer contribution to funds, any kind of taxes to be paid to a government, any kind of leave encashment for the employees, any kind of use of railway assets, any kind of interest on loan given to banks, and all those things. Those were all the cases which were eligible for deduction only if the money was paid within the due date of return filing. We have already learned this. Yes. In the current year, income tax came and clarified that, Rahul, when you spoke about interest on loans, interest on loans even paid to an NBFC will not be allowed as a deduction going forward. Interest on loans paid to an NBFC also will not be allowed as a deduction going forward. They notified 3 layers of NBFCs. One is top layer, upper layer, and middle layer. All these 3 NBFCs also are not going to grant you the benefit if you do not make their interest payments on time. Rahul, what is on time? Within the due date of return filing. But the amendment is not that. The significant amendment is bottom. In the bottom. Starting this year, income tax came and said that, Rahul, under section 43B, if you have any payment due to MSMEs, what do you have? Any payment due to MSME. MSME is micro, small and medium enterprises. Income tax says, going forward, if you have to make a payment to MSME, you are supposed to follow the MSME rules. You are supposed to follow the MSME rules. Rahul, what is the MSME rules? MSME rules come and say that if you are going to interact with an MSME, when you enter into an agreement, you need to mention the timeline in which you will make the payment to him. You will have to mention the timeline in which you will have to make a payment to him. For example, today I have an entity and I register it as MSME. Starting tomorrow, if I go and provide services to someone, I will have to enter into an agreement with that person, and in that agreement I'll have to clarify by what time do I want the money back. MSME Act comes and says that whenever a transaction happens with an MSME, the payment should happen as per the agreement. The payment should happen as per the agreement timelines. But this should not exceed 45 days. Meaning if I enter into a transaction with you as an MSME, and if I come and tell you that I have to make the payment to you within 30 days, I will now have to make the payment to you within 30 days. I will now have to make the payment to you within 30 days. Assuming I enter into a contract and I come and say that I'll make the payment to you on 90th day. MSME Act will come and say, I'm sorry, that is not possible. As per the MSME Act, maximum credit period which you can give to a person is 45 days. Maximum credit period which you can give to a person is 45 days. Rahul, what if I don't enter into an agreement itself? What if I don't enter into an agreement itself? MSME Act comes and says, if you have an oral agreement, if you have a oral agreement, the timeline is only 15 days. The timeline is only 15 days. In this year, Nirmala Sitharaman ji came on the stage and came and said, dear people, MSME is the only industry which is struggling right now. People are trying to become the unicorns. People are trying to grow up in the market. But for them to grow up in the market, the big players are playing wrong. The big players are playing dirty. They're entering into transactions with the MSME, but they're not making their payments on time. Because they don't make the payments on time, MSME is not able to flourish. And therefore, I am very unhappy with this model. I am hereby proposing that in section 43B, going forward, if you are going to have a payment to be made to MSME, you need to make it following the MSME Act guidelines. You need to make the payment following MSME Act guidelines. What is the MSME Act guidelines? If it's a written agreement, then the guidelines says the date will be as per the agreement. At no point of time should the date exceed 45 days. But if there is no written agreement, you have to make the payment within 15 days. Income tax says, if going forward, you don't satisfy these timelines, then the payment which you make will be allowed only in the year in which the payment is made. The payment which you make will be allowed only in the year in which the payment is made. In simple words, accrual will be denied to you. Now, notice this very carefully. For all the other cases which we learned right now, we came and said, I'm giving you timelines till the due date of return filing. Here, I'm coming and saying, I'm giving you timelines as per MSME Act. So, if you do not satisfy the MSME Act guidelines, the income tax will deny the payment deduction to you. And will allow to you only in the year in which the payment is made. Let's take some examples so that you understand this a little better. Let's take an example where you have entered into a transaction. On 1st February 2024. The mode of agreement is written agreement. And in this mode of agreement, you have come and clarified that the credit period is 30 days. Case number 1, you are entered into the transaction on 1st February. The mode of agreement is written and the credit terms is 30 days. In that case, MSME Act comes and says, make the payment on. MSME Act comes and says, make the payment on. MSME Act comes and says, make the payment on 30th day. I will assume 30 days would mean 29 days is February in the current year. So it will become 1st March. 1st March, 2nd March, whatever it is, some date like that, 1st March or 2nd March. Now MSME Act is coming and saying, make the payment on 1st March or 2nd March. You will come and ask, Rahul, tell me, when is the actual payment made? You will come and say, Rahul, my actual payment I made on 4th March. My actual payment which I made is on 4th March. Now, Rahul, in this case, will you have a problem? Answer is no. Please understand what is happening. Income tax is coming and saying, if you make the payment beyond the due date, I will allow it in the year of payment. Now, notice in this case what is happening. My accrual is also in the same year. My payment is also in the same year. So, the year in which I will allow it, is the same year. So, should I disallow something? Answer is no. Will be allowed in the same year itself. will be allowed in the same year itself. Clear, not clear? Yes. Repeating the facts. You have entered into the transaction on 1st February 2024. Mode of payment is again return. Credit period is 30 days. Credit period is 30 days. The due date is 1st March 24. 1st March 24. Now you have made the payment only on 5th April. You have made the payment only on 5th April. Rahul, in this case, what will happen? Income tax will come and say you have not satisfied the due date. You have not satisfied the due date. The payment will be disallowed and allowed in the year of payment. Now, the year of payment is 5th April, which means it has gone to next financial year. It has gone to next financial year. So, you will disallow the payment in the current year. You will disallow the payment in the current year. You may come and say, Rahul, the payment has happened before due date of return filing. Doesn't matter. Doesn't matter. Income tax for MSME alone has come and told that the due date is not return filing due date. The due date is MSME Act due date. The due date is MSME Act due date. You will disallow it in the current year and allow it in the year of final payment. Allow it in the year of final payment. Yes or no? Yes. Next question. Rahul, you have entered into the transaction on 15th February. You have entered into the transaction on 15th February. You have taken a return agreement. You have taken a return agreement. Credit terms as per your agreement is 70 days. Credit term as per your agreement is 70 days. MSME Act will come and say, I am sorry. It is not possible that you can have a 70 days agreement. It is not possible that you can have a 70 days agreement. I will assume the due date only as 45 days. I will assume the due date only as 45 days. Now, what is 45 days? 15th February ka you will get 14 days. 14 plus 30. 14 plus 30 will give you 44, which means it will be 31st March 24. Income tax will come and say, MSME Act will come and say, forget that you have a credit period of 70 days. Credit period will now become only 45 days. You have to make the payment by 31st March. Rahul, I made the payment only on 6th May. I made the payment only on 6th May. Income tax will come and say, I'm sorry, you have not made the payment on time. Therefore, the payment is disallowed. The payment is disallowed and will be allowed in the year of final payment. Will be allowed in the year of final payment. Next. Rahul, assuming the transaction was entered on 1st March 24. Assuming the transaction was entered on 1st March 24. Mode of payment is return. Mode of agreement is return. The credit period you have agreed is 40 days. The credit you have agreed is 40 days. Now, what is the due date then? The due date will become 31 plus 9, maybe assuming 9th April. Assuming 9th April. If you have made the payment on 5th April. If you have made the payment on 5th April. Now, understand this very carefully. Understand this very carefully. Although the payment has happened in next financial year. Although the payment has happened in next financial year, it is within the due date as per the MSME Act. It is within the due date as per MSME Act, and therefore, even though payment happened on 5th April, you can still claim the accrual in the current year itself. You can still claim the accrual in the current year itself, which means there will be no disallowance. There will be no disallowance. Why, Rahul? Because expense was booked in the current year. Yes or no? Expense was booked in the current year. Payment alone happened in the next financial year. Since the payment happened within the due date, there is no problem. Accruals will get permitted. Accruals will get permitted. Accruals will get permitted. Yes or no? Yes or no? Yes. Please be very careful about this. Please be very careful about this. Finally, last question. Let's say, for example, the entered into a transaction is on 30th March 24 and the mode of agreement is oral. The mode of agreement is oral. You have no other options but to assume the credit as only 15 days. Assume the credit as only 15 days, which means due date will become 14th April 24. 14th April 24. If you made the payment on 2nd April 24, even though the payment is happening in the next year, the payment is happening within the credit period and therefore it will be allowed on the accrual basis itself. It will be allowed on accrual basis itself and therefore there will be no disallowance. There will be no disallowance. You will get the full claim. You will get the full claim. Yes or no? Yes or no? Yes. Yes. These are some examples for you to understand what MSME amendment is. Please keep the amendment and ensure that you read this properly. You are expecting questions on 43B this time. You are expecting questions on 43B this time. There is no doubts. You will get questions on this. You will get questions on this. take a note of all these illustrations and make sense of it. If you still don't understand it to me, if you still didn't understand this, reach out to me and I can help you explain this once again. I hope everything is clear by now. Yes, let's read the section. The section comes and says, whenever the following expenditures are made, the expenditures will be allowed on accrual basis only if they are shall not be allowed on accrual basis if they are paid beyond the specified date. Item on the bottom is amount paid to MSME beyond the agreed due date. Beyond the agreed due date. What is agreed due date? It is date not exceeding 45 days or 15 days if there is no return agreement from the date of acceptance. If such thing is happening, then the payment will be allowed only in the year of actual payment. The payment will be allowed only in the year of actual payment. A fairly easy provision, but a very critical provision for your current attempt. Please keep this in mind. Now, one thing which you need to understand is the amount paid here is the actual payment of expenditure, the money which you are supposed to pay to him, Do not confuse this with interest on MSME. If you remember, interest on MSME is a permanent disallowance as per section 37. It's a permanent disallowance as per section 23 of MSME Act. It's a permanent disallowance as per section 23 of MSME Act. That disallowance has nothing to do with PGBP. So interest on MSME will directly get disallowed as per MSME Act itself. This is not that. We are talking about an actual expense made for MSME. So in exams going forward, if you see a question where they come and say payment to be made to MSME along with interest, you will take the interest and fully disallow directly. For payment alone, you will check for these conditions, and if the conditions are satisfied, you will give the expense. If the condition is not satisfied, you will disallow the expense. Yes or no? Yes, please keep this in mind. Apart from this, you have no other amendments in PGBP normal computation. The one critical amendment which has come is in the presumptive taxation. Until last year, whenever you spoke about the word presumptive taxation, you always used to come and say that Rahul, presumptive taxation is applicable only if the turnover is up to 2 crores in case of business and up to 3 crores, up to 50 lakhs in case of profession. What was it? It was up to 2 crores in the case of business and up to 50 lakhs in the case of profession. Starting this year, income tax comes and says presumptive taxation can also be opted for additional 50%. Presumptive taxation can also be opted for additional 50%, meaning 2 crore limit will now become 3 crores. 50 lakh limit will now become 75 lakhs. Rahul, can everyone do it? Answer is no. Income tax says if you want to get the benefit of presumptive, even though your turnover is within after 2 crores but within 3 crores, you can only do so if your total receipts which you get, out of that at least 95% is by permissible modes. We have already learned the same provision for your tax audit. If you remember, in tax audit, what happens? The general rules for tax audit is that if your turnover is more than 1 crore, you need to get a tax audit done. But if it is so found out that your most of the receipts are coming in permissible modes and most of your payments are also coming in permissible modes, then the 1 crore limit becomes 10 crores. Something similar to that, excluding the payment part, receipts part is what is covered here. Income tax is coming and saying if it is found out that at least 95% of your receipts are by permissible modes, in case of business, the limit of 2 crores will now become 3 crores. In case of profession, the limit of 50 lakhs will now become 75 lakhs. You need to keep this in mind that in exam, if they come and now tell you that there is a receipt of professional income or business turnover, you will have to ask yourself a question, Rahul, tell me whether the receipt had come in permissible modes or non-permissible modes. If it had come in permissible modes, whether did 95% of it come in permissible modes? If yes, then in that case, for 3 crores, you will be eligible for presumptive under business, and for 75 lakhs, you will be eligible for presumptive under profession. Keep this in mind. Don't expect this from a compulsory question perspective, but this is very critical from an MCQ perspective. My feeling, this will come more as an MCQ question this time. A fairly very good provision for you to test in MCQs. You can ask brilliant level of questions in this. Because this can be correlated with your tax audit question also. Yes, so please keep this in mind. Going forward, presumptive taxation income is 3 crores and 75 lakhs if your receipts are more than 95% in permissible modes. More than 95% in permissible modes. Read. In case you are a resident individual having total income of business or profession up to 3 crores if the turnover or gross receipts is received in cash, check, bank draft not exceeding 5% of total receipts, which means non-permissible modes are less than 5%, then in that case the turnover limit becomes 3 crores, and in case of profession you'll find the same number as 75 lakhs. In case of profession you'll find the same number as 75 lakhs. Keep this provision in mind. Keep this provision in mind. And we are done. You are done with the amendments relating to basics, income tax rates, salaries, HP, and capital gains. And capital gains, we have spent about 1 hour right now. We have spent about 1 hour right now in understanding this. In the next video, we will discuss about the amendments which have come in the subsequent chapters. After this, fairly the amendments are quite straightforward. You don't have many amendments to discuss. One important amendment will come in IFOS, and then you have the major amendment of 115 BAC. The major amendment of 115 BAC. 115 BAC itself will be a separate topic altogether for us to discuss separately. But these are all the amendments which you have from PGBP chapter, salaries chapter, and rates of taxes chapter. Please keep these amendments in focus and read them properly for your May 2024 for ensuring that you have the relevant updates for you to clear your exams. Yes, with this I'll sign off in today's video. I will